Good morning, everyone, and thanks for joining us here at the European crossover webinar. And we are seeing indices under quite a bit of pressure. Bear with me. We are coming into some support here. I'll go on and take a quick look. And we're actually rolled over into the June, but there's still more volume actually into March still. But you can see we've come in right into this support here. We also have a point of control, although that was off the March contract, which came in at 12,800. So we'll see whether or not we can make a stand right in here. We're kind of making a hold here. Beware if you're already short, because we did go on and dip down here to the 12,840. And we had some support around the 830, and then we took another dip, and then we took one last dip right now as we close the hour here, close at this top of this hour. So just beware of that. We've come off quite a bit. Interest rates are really the key reason. We'll go on and push back in that. You can see here that the 10-year is really taking a pretty good dip. But although we've come down here into this support area, this 31.31, we took it out by just a bit to get down to what it looked like about, actually got, 31.30, so just a little bit under that. And you can see we're trying to hold the fort here. Indices are still pressing towards these lows here, and I think we'd be selling any rallies. I mean, we're definitely showing this increased amount of volatility that looks like it's going to go on and stay with us for quite some time. Let's go and take a look where we stand here on economic data. Coming in today, we do have Eurozone industrial production at the top of the hour. And then we come to the States, we will have PPI. We'll see what we saw with CPI was a complete surprise and actually basically a game changer at that point. We'll see how this plays out. Beware of that. We do have Canadian employment data also out and preliminary University of Michigan at the top of the 10 a.m. hour. So beware of that, PPI and University of Michigan. And Irina said to go and take a look at Bitcoin. Bear with me. So we are trying to find a little bit of a bottom in here. You see that right now. We did dip even further, so this fibs are going to be a little bit lower because we did dip down here just to take out that 12,815. Bear with me. Some reason I guess didn't want to save the charts on that, but we're still holding up very well in Bitcoin. Look at that. We've been all the way up to 58,000, and you can see here we're still holding up very, very well at 56.6. So I don't see any changes here on Bitcoin. We're doing, I would have thought we would see more of a pullback, but it's something you want to be cautious with because of what we've seen happening here in U.S. rates. May see some impact, but at this point we certainly haven't. And we're still holding near these lows here. Look at that. Definitely want to be in a situation where we'd be selling rallies. You can see here, there's that 12,838. on the profile I had down there. So the market actually initially held there in that area, looking on a 30-minute chart, and then we uh, popped up a little bit. You can see right here on the initial run down there, we held, and then we moved up a little bit, then we came right back down. Then we held again around 820, and then we popped back up a little bit to 850, and then we just now came down again. Although we are into some area of support in here, just be cautious. I think we'll probably see a little bit of bounce. Market may try and stabilize. The only thing I don't like is I have gone and rolled to the June, but I don't like it because right now we're still seeing more volume in here in the March. So the front month, I guess technically is June, but you can see here, we take a look at March and far better volume. I mean, I'm sure we're going to see a lot more volume rolling in into the June as we move into the US session, but just be cognizant of that. We'll go on and move into the news. The dollar steadies from a 1-week low as bond yields tick up. US dollar declined from a near 1-week low on Friday as bond yields inched higher, but it looks up for its first weekly fall in 3 weeks against a basket of major rivals as riskier currencies drew support from calmer market sentiment, although we're not seeing that this morning. The dollar index against 6 majors was at 91.58 after hitting 91.36. It has dropped 0.6. The dollar index is firm more than 1.6% this year as it attract benchmarks 10-year yields below 1% as high as 1.625. Focus next will be on the Federal Reserve's policy meeting with Jerome Powell refrained from raising concerns about higher bond yields earlier this month. The real dollar story still awaits the Fed to play its cards, said Stephen Ennis. Will the Fed continue to walk the dovish talk, or will it talk back from its dovish comments when and if it becomes clear that fiscal and vaccine-led recovery is kicking into full gear? It is a line that separates the dollar bulls from bears over the next 6 to 12 months. The safe harbor Swiss franc eased to 92.67 after sliding over a 7-month low earlier this week, while the yen fell to 871. Bank of Japan may tweak a 3-tier deposit system next week's policy review to exempt a larger portion of reserves from negative interest rates, sources told Reuters. Commodity-linked Aussie and New Zealand dollars retreated from near 1-week highs. We're still on track to post a first weekly gain in 3. So that's it about as far as news. We'll go on and move into the analysis. We saw a pretty good little rally yesterday in the euro, even exceeded that 1959, went up to, I think it was 1989. The euro posted a rally among the drop back of risk on rally. Resistance for Friday will be 1992 with support at 1993. So just want to update that. Now we did go to put 1933, but in light of what's happening with 10-year notes, I think we're going to actually have to update this. Like I said, I usually will keep the same, but when I see something specific that's happening or something that makes a determiner, and I think we're seeing that with 10-year yields that really jumped up. Then we're going to go with this 1913 revisit down there. So let's update that to 1913. I'm surprised the dollar isn't stronger at this point. Let's go and move into the cable. Cable finished Thursday with a third consecutive positive close. Resistance on Friday will be 40.14 with support at 39.07. And cable's probably holding up better than Euro would, but we'll stay with that. We'll go with that 39.07. And move on to the Aussie dollar. The Aussie has rallied nearly 175 pips off the recent lows. Resistance on Friday will be 78.04 with support at 77.39. Same thing. I'm surprised that the Aussie is doing so well in light of what's going on with equities. Let's see here. We put here same thing. I think that's got to be reflected at 77.39. Let's go right there with 77.14. Onto the Kiwi. The Kiwi closed above 72 on Thursday following risk on. Resistance on Friday will be 72.55. Once again, I think that's going to be tempered by what we're seeing in U.S. interest rates. It's impacting indices with support at 71.74. We are above that, but same thing. I'd like to see that move a little bit lower here. Yeah, there's our 71.74, but I would look for a little bit lower on that. We'll go with 71.60, but I think today is going to be a little bit of a tricky day. I'll tell you what, we'll just leave yesterday's support there. And resistance, I think it was going to be 72.44, which doesn't seem real likely under the current environment. Oh, 72.55. But we'll keep it as it was. On to the dollar CAD. The dollar CAD posted a solid drop on Thursday. Dollar CAD posted a solid drop on Thursday, breaking out of the consolidation range. Support on Friday will be 25.15 with resistance at 25.81. Same thing here. What we're seeing today, I'm surprised the dollar hasn't seen more of a bid. I mean, I think it's in pretty bad shape, but I would have expected more than that. So we'll go on and put the resistance. I'll revisit back to this level, 25.98. We'll still stick with what we had, 25.15, but it seems a little bit low at this point. On to the dollar peso. The dollar peso sold off solidly for a third consecutive day. Support for Friday will be 20.59 with resistance at 20.77. Same thing here. We've seen this rebound. I think this is all over the place. I think we're going to see more volatility as the session goes on. The upside will just go with the close from this day, which is going to be 20.92. I think we have to expand these levels a little bit. On to the dollar yen. Got to be careful with this dollar yen. We've got that weekly level up there at 9.57, and that's gotten me a little bit concerned. I think we could spook some people. That's what I'm thinking we may go to. I think we're at bias chart resistance right now, which I had, but the dollar yen has consolidated at the 850 area. Support on Thursday will be 828 with resistance at 906. Now we're at 906, but I'm going to go back still to this 957 if we get a foothold. So let's go 906, and then that key weekly level 957. I'm just going to put a hyphen there, not a hyphen, but asterisk, and support 828, which doesn't seem likely at this point. But especially with U.S. yields ramping up. Cash dollar index. The dollar index has posted 3 consecutive down days. Support will come in at 91.30 with resistance at 91.90. I think I came up with this level right here because right there, I think gives us 91, actually gives us 92 there. Let's just take a look at it on a 2-hour chart. A little bit of a stretchy here. Let's go with 92.05. But still, you got to be wary because of what we're seeing. So 92.05. And we had 91.30. I think it was over at 28. Let's check. Yeah, we had 91.30. Well, not bad. Low today so far is 91.36. With that, we're going to move into the cross rates. Wow, this NASDAQ is still weak. We're sitting at these lows of 28.17. A little bit concerned, but we're holding up like a champ right now. Taking a look here. Just to be on the safe side, if we do see a slide, support comes in at 77.49. And resistance, go with yesterday's high, which actually holding there, 78.59. And on to the euro pound. No changes here on the euro pound. Still sucking wind, not going anywhere. I think you'd be looking at a half-hour chart or 2-hour chart. Look at that, which is not going anywhere. Moving on to the Euro odd. We had 53.55. I like that there, and with the resistance at 55.12. Not seeing any impact from the risk off. For right now, it's going to be right there, 54.85. Onto the Euro Kiwi. No change here. Look at that. Not really going anywhere. We had 65.13 for the low and the upside 66.34. And go with this close right there. That's 29, and that is 45 or yeah, 66.45. So just a little bit higher. Onto the Aussie yen. Resistance would be the prior high that we saw here, which is 84.94. I don't think we're going there though. And you got to be worried about this downside. We have 83.43. For right now, it's 83.67. And onto the guppy. Yeah, this thing is still going to the moon. Let's go to a weekly. $52.78 potentially, although we're running out of gas up in the air. We do have a resistance level right there, which is 52.04. So let's go with that. That's a weekly close level. Support. $51.51. Let's call it 51.49. Boy, this NASDAQ is just hugging those lows. And sterling odd. We had 79 even and upside 80.60. We'll stay with that. And then just take a quick look where gold is at. We've kind of dipped back down, but obviously interest rates are having a big impact. Support for gold is right there at 16.97. We're just about there. 16.99. And copper's dipped back a little bit. Actually, hold up faring a little bit better than what I expected in light of the interest rates, considering the volatility. Yeah, Pedro said, look at intraday levels at gold, and yeah, we just did, and it's 1697. All we did was just go right there. See that? It's got to hold that area, and there it is. It's actually 1698, and that's actually the low for the session. 1697.90. You can see that. Needs to defend that. And Amir said to take a look at silver. Silver looks in bad shape. Unless they've rolled over into May. But March would be the front month. That's odd. I guess they rolled over to. Oh, yeah, that's right. So it would be. Let's go to May. There we go. And silver, this should be, let's put here for May. There we go. So in May is the front month. It needs to hold this area 2551 right now. 2551 right there. That's going to be key. And then platinum. You can see this low right there. That's going to be key right there for platinum. 1169 right there. If they want to overshoot it a little bit, they can go for this previous high, which would be 1163. So really the key is going to be this 1163, between 1163 and 1169. That's what you're looking at. That's a key there. If you look on a 2-hour chart, this is where you got the, you see right there? That is where you've got, which is 1159.70 if they want to, 1159.40 if they want to take that stab. But you can see you've got some good volume all in here. You see that? This whole zone here. The bottom of the zone, but we've already fallen off quite a bit. So you can see right here, right there, 1177, which they've dipped below that and you had a pretty good level of zone here. Look at this. Coming in at 1177. We've dipped below that. And the next volume area is going to come in around here, 1161, all in here, and right here, most recently, 1168. So right here in this area, just a little bit lower, is the key. And the culprit is right here, the 10-year yields. Or this is the 10-year futures. We've come back down here, and we're hugging down here these lows. And one more look for Bitcoin. You can see here, we're just hugging at these lows. Not sure why they didn't save the chart on here. It's kind of nuts. I had all my levels saved. But that being said, Bitcoin is holding up fantastic. By the way I look at it, I mean, I would have thought we'd be down in here, and we're holding up very, very well. If you're trying to look at it super close, and we are looking on a 2-hour chart, right there, that's key for right now. See, I'm just going with this close here. You see how key that is? We rallied up here and we closed solidly. Then we posted, almost looks like a little hanging man almost, but we kept the move going higher. When we came down here and we broke below it, the market took stabs up this same current level. See these wicks? We fell back, and where did we rally back? To that same level. We were able to break above it. We tested below it, and we launched from it. Now we're back at it again. So that key level comes in at 56,296. And below that, then would be getting a little bit concerned if you got below that 54.4. But right now, this is the key. And if they want to push it, it'd be 55,755 right there. I'll show you. See right there? So that's going to be your key levels to focus on right there. $55,761. Okay, and that'll be it. Have a good day. We'll see you in the well, Amir said look at IWM, which I do not even look at. Hang on. I can take a quick look, but it's just not a market I look at all. I just don't pay much attention. I know it was really traded very actively yesterday, and then we'll call it a day. Look at that. It's still pretty solid. Look at that move. And are pulling back here. Look at that, 231.58. But it's just to buy right now. It's got to hold this area right there on a short-term basis, 231.14. Well, if you're looking at the Russell also. $23.25 on the Russell. Okay, have a great day, and thanks for joining us in the European Crossover webinar.